Good afternoon, everyone. My name is Allie Johnson, and I will be moderating today's webinar. I'll begin by introducing the Capital Pathways program, introduce myself, and then pass the mic to our guest speaker, Ford Scott, who is a lender relations specialist based out of the Richmond, Virginia, U.S. Small Business Administration District Office. He'll introduce himself and take us through a presentation on SBA loans. As we go along, please feel free to ask questions using the Q&A function, and we'll respond to them at the end of our session. For any questions that we can't respond to in this webinar, we're happy to address through our no-cost one-on-one services or connect you to resources that can help. We'll share a recording and slides of this webinar afterwards. So, what is the Capital Pathways program? It is a program funded by the U.S. Treasury SSBCI initiative, sponsored by the Virginia Department of Small Business and Supplier Diversity, and hosted by the Virginia SBDC and George Mason University. So we'll start with program overview, go through the program eligibility, and finish up with the outline of services that we offer. I mentioned before, the Capital Pathways program is a no-cost, specialized SBDC program that helps small businesses build systems and habits needed to become capital ready. Capital readiness matters because being capital ready because businesses that are less prepared or not capital ready can often self-select out or fail loan applications. These early failures often correlate to a lack of adequate capital, and higher cost alternatives often don't build long-term capacity. Overall, only about half of the loan amounts requested actually reach small businesses. To put things in perspective, about 25% of small businesses need access to financing for growth and preserving cash flow. However, only 20 to 30% of those who apply actually get loans approved. To help address this challenge, Capital Pathways creates a path to financial and legal readiness. Our program offers an immersive, hands-on group experience paired with one-on-one support. The people who are eligible for our program are very small businesses and nonprofits at any stage, especially those facing challenges accessing traditional financing. The services we provide include a guided self-assessment, legal structure validation, financial skills and tools, and loan application readiness. We start this process with a self-assessment that pinpoints your business's key gaps so we can connect you with tailored resources, either through our Capital Pathways program or through other resources that can help. Under our legal structure validation, our in-house advisors can help you through more basic legal questions, and we partner with a law firm that can help with more complex topics related to business registration, trademarks, and contracts and agreement reviews. We also offer financial webinars on topics including financial basics, financial statement preparation, and QuickBooks training. Additionally, we offer one-on-one tailored support that covers business foundations, profitability and pricing, financial forecasting, financing options and readiness, as well as financial statements and tools, and loan readiness and lender preparation. This loan application readiness service includes both webinars and one-on-one individualized support. And these webinars cover topics such as what lenders look for in loan applications, interactive mock loan interviews, and sample applications, and ones like today's session on SBA loan options. In addition to these webinars, we do have a partnership with a lender who provides one-on-one support for those looking for capital. Furthermore, we're rolling out soon this credit building advising, where a credit advisor will help review and interpret your personal and business credit reports in order to help you build an individualized credit improvement plan so that you can apply and receive the best financing options available. So if you're interested in getting started with the Capital Pathways program, you can reach out through our website at virginiasbdc.com/programs/capital-pathways, or you can contact me directly at ajohn216@gmu.edu. I'll share my email and our website link in the chat so that you can all have it. Now, moving over to introductions, allow me to introduce, or as mentioned before, my name is Allie Johnson. I am the Capital Pathways Program and Intake Coordinator, and I will be moderating today's session. I have a professional background in economic development, small business support, and access to finance projects, both domestically and internationally. And today's session will consist of a 90-minute presentation. As I mentioned before, please feel free to ask any questions throughout using the Q&A function. We will get to all of them as best we can. And for any that we're not able to address in today's session, we will do our best to address through no-cost one-on-one services or connect you with resources that can help. Again, as I said before, we'll be sharing a recording and slides of this webinar in a follow-up email. Now that I've said all of that, I'd like to pass things over to Ford to introduce himself, tell us a bit about his background, and start our presentation.
Sorry, I was trying to find my audio. Okay. My name is Ford Scott. I'm what they call a lender relations specialist with the Small Business Administration. My main job is to work with lenders to help them understand our lending programs and navigate the process. You'll see in a minute, all of our lending programs are offered through lenders, they're not made directly, so I work with them. But I also do things like this webinar today where I'm providing information about our lending programs. So I'm going to turn my camera off until we get to the Q&A because I have to look at my screen, which is over here. But let me share my slide deck. Okay, so today's topic, as I mentioned, we're going to cover all of SBA's lending programs. We have programs that lend up to $5 million, and we'll go into that in detail in a minute. So the first thing I want to mention is that we do not offer grants of any kind. You may hear that, well, I used to say you would hear that on late night television. I don't know who watches television anymore, but we don't offer any grants directly to small businesses to either start or grow a business, so that's not available through us. We also, as I mentioned, do not lend directly except under our disaster lending programs. So that's if there's, a tornado, an earthquake, something like that. What we do mainly is we offer our loans through lenders, commercial lenders. So we provide them with a guarantee, which means if the small business borrower defaults, we will reimburse them for a portion of their loss. So that encourages banks, credit unions, some small business lending companies to lend to small businesses. And that guarantee can help offset some of the risk associated with startups, insufficient collateral, non-standard repayment terms, and some industries that the lender may not be comfortable with. There are some types of entities that are not eligible for SBA financing at all. So nonprofits are not eligible under any of our programs. The second one here comes up frequently. You can't use our programs for financing investment properties. So you can't apply if you're going to, the most popular request that we get is somebody wants to buy houses, fix them up, and then rent them out. That's not eligible under any of our programs. You can't use our programs for apartment buildings, shopping centers, an apartment complex where they live there. It's not like an RV, a campground. Those are all ineligible for SBA financing. If you happen to be a nursing home or assisted living facility and you are providing more than just room and board, so you're offering medical and healthcare services, that would be eligible. But if you're not doing that, it would be ineligible. We don't lend for pyramid or multi-level sales distribution plans. The old example of that used to be Amway. I'm not sure what the current example of that is, but those are all ineligible. Any activity that is illegal on a federal, state, or local level is also ineligible. So, in some states, marijuana is legal at the state level, but it's still not legal federally. So you wouldn't be able to use an SBA loan for that reason. Any business that restricts patronage for any reason other than capacity, in the building is not eligible. So, example, you couldn't get an SBA loan if you're going to have a men's only or women's only health club. It has to be open to everyone in order to be eligible. We did change our policies. I forget how long ago this was, related to those with a prior criminal history. We removed all of the extra uh, requirements. We used to have requirements that, you'd be fingerprinted in some cases and things like that. We got rid of all of that. So the application itself now will tell you that you're only ineligible if you're currently incarcerated, serving a sentence of imprisonment imposed upon adjudication of guilty, or you're under indictment for a felony or any crime involving or related to financial misconduct or a false statement. So if you can say that none of those apply, then you're eligible. Otherwise, you would be ineligible. We also have a rule related to a prior loss to the federal government. So if you have any prior federal debt and you either are currently delinquent on that loan, or you had a charge off where you didn't pay the full balance that was owed, you will be ineligible for a new SBA loan. If you happen to have a charge off and you're willing to pay that balance on that outstanding loan, then you could get a new loan. But as long as that's outstanding, you're ineligible. We recently revised our policy related to businesses that are owned by, U.S. citizens. So we have a requirement now that the business is only eligible if it's 100% owned either directly or indirectly by those that are U.S. citizens, U.S. nationals, or who are lawful permanent residents. And if you happen to fall in the last category there, you will be asked by the lender to provide a copy of your green card and fill out a form, which they send to the USCIS to confirm that you're in the country legally. So now we're going to cover, as I mentioned, we have several programs. So we're going to cover 3 different programs. The first one is our 7A loan program. It accounts for probably at least 90% of our total volume by number of loans approved. And the loans can be used for pretty much any legitimate business purpose. You can use it to either acquire, refinance, or improve real estate, building. Now, remember that does not, we still don't do the investment properties. This would be what we call owner-occupied commercial real estate. And I don't know if I have it in this slide deck, but SBA does set minimum, what we call occupancy requirements, which means that if your business is going to use our loan program to either acquire or construct a building, that you would have to occupy at least 51% if it's an existing building, and at least 60% if it's new construction. You can get short and long-term working capital, refinance debt, purchase machinery and equipment, furniture and fixtures and supplies. We do allow changes of ownership. In fact, we now allow partial changes of ownership. So if you wanted to buy a portion of a business, that's eligible. There's additional requirements for that, but we do allow it. Franchise operations, most of them, I would say, are eligible. We have a franchise directory. It's not your job to check that directory. It's the lender's job. But just one example of a franchise that is not eligible are 7-Elevens. But the lender will work with you on check on. They will check the directory to make sure that it's eligible. And the loan amount, you can go up to $5 million. We don't set any minimum. The lender will set their minimum. So even though we don't set one. Some lenders will not lend for, let's say, 50,000 or less, or they won't lend for even 150 or less. It'll just depend on the lender. And then you're going to receive a loan chart that outlines our different lending programs. It's not up to you again to understand all of the details of these programs. It's just giving you information. We do have an SBA Express loan program, which goes up to 500,000. I will mention that now. If you're interested in a line of credit, that would be the best route if your request is 500,000 or less. And the Express program allows the lender to make the decision on their own. They don't have to come to us to get the approval. So it's potentially a faster turnaround than our non-Express programs. The second program I want to mention here is our 504 loan program. This can only be used for two purposes, either to buy or construct owner-occupied commercial real estate, or to buy long-term machinery and equipment. It has to have a useful life of at least 10 years. It can't move around. So trucks are not eligible under this. It would have to be equipment that's put in place and stays in place. And the benefits to you as a small business owner of this program are there are three parties involved with this program. It's sometimes referred to the 50-40-10 program. So a lender will generally provide 50% of the financing you need. They will have their own loan, and then SBA comes in generally for 40%. On that 40% piece, and here's where we get to the benefits for you, we offer a 25-year low fixed rate loan for that 40%. So the interest rate is likely to be lower than what you would get if you got a conventional loan, went directly to the bank. You can also include some out-of-pocket costs in the project total, so you don't have to pay that at closing. And then again, the long-term and the lower interest rate. You do have to inject a minimum of 10% under this program. That would increase by an additional 5 if you're a startup. Well, if you're less than 2 years old, and then that would increase by another 5% if you happen to be what they call a special, if you're constructing or buying a special use property. An example of that would be a hotel or a gas station where it's difficult to convert it for resale. So then it would go up to an additional 5%. So the most you would have in would be 20%, but in most cases it's going to be 10. And you can't do things like finance working capital, inventory, anything that's non-real estate or long-term machine and equipment. But you can combine the 7A program, which I just mentioned a minute ago, with this 504 program. So you can combine them. And we see that often, especially with business acquisitions, where the 504 program will be used for real estate and then the 7A will be used for the rest of it. The third program here is our microloan program. It provides loans up to $50,000. This works slightly different than what I described earlier. So SBA provides funds directly to what we call intermediary lenders. They are nonprofit community-based organizations, and they will then turn around and lend the money directly to you. They are required to provide also technical assistance, so they will provide technical assistance to you. And the loans can be used for working capital, inventory, supplies, furniture and fixtures, machinery and equipment. You cannot use it for real estate, and you can only use it to refinance debt if it will improve your debt position or cash flow. And when you get the slide deck, you'll see these links here. You can go to these links and you'll see, I did want to mention, so for these microlenders, SBA approves microlenders to make these loans in certain territories. So they're each assigned a territory. We do have a couple of holes where we're missing microlenders here in Virginia. One is the Richmond area and the other is the Hampton Roads area. But we have one in the Stanton, Waynesboro, Augusta County area. We have one in Southwest Virginia, in Abingdon. They cover all of that area down there, and then also up in the Frederick County area. We have another one covering the Prince William area, and then we have one in Charlottesville who covers that area down into Southside Virginia. So, down into Danville, the down into that area. So what you should do before approaching a lender, as Ali mentioned earlier, the way you present yourself to the lender is going to have a big impact on your ultimate success in receiving the funding that you need. The best way to improve your chances are to either prepare a written loan proposal or a business plan. And of course, Ali mentioned the SBDC is there to help you with that. And the lenders will look at that loan proposal as evidence that your business has strong management, experience, and a thorough understanding of your marketplace. They will also look at the relevant financial information. That's what they're most interested in, because they want to see how you're going to repay the loan. Ali will send out to you later. I did a webinar on how to prepare a loan proposal, and she'll send that out. And then if you wanted to prepare a business plan, we have the link there for that. And if you think about the difference between a business plan and a loan proposal, a business plan is sort of your overarching document for your entire business operation, your plans for the business. And the loan proposal is a more streamlined document focusing on the specific loan that you're seeking from the lender. So before you approach a lender, you should have 4 things that you can clearly address for them. How much money you need. So I usually say with small business lending, it does not work like mortgage lending or auto financing. I recently bought a car, and I went to my lender and I said, how much do I qualify for? And you'll see that with your mortgage lending as well, but not with small business lending. With small business lending, you need to come to the table with a specific dollar amount that you can tell the lender what you need, and then a breakdown of how you'll use that money. And they will have expected you to get quotes. If you're going to buy equipment or inventory, different things like that, they'll expect you to have that information. So again, you don't ever go to a lender and say, how much can I get? They don't they don't appreciate that. So you'll come to the table with the amount. The third bullet there, how you will repay the loan. That, of course, that's the most important thing that they look at. If you think about it personally, if you lent money to somebody, your main focus would be how you're going to get repaid. So that's why that's what they're interested in. And then what you'll do if your business is unable to repay the loan, that's where you get into what collateral you'd be willing to pledge for the loan that could be liquidated if there's a default. So to help determine, the ability to repay the loan, almost all lenders that we deal with, and I would say all of them, will order a copy of your personal credit report. Some of them may also order one of the 3 commercial credit reports. We don't see every lender do that, but some will. In terms of the personal credit reports, there are 3 credit bureaus, Equifax, Experian, and TransUnion. We recommend that before you apply for a loan, you get a copy of those reports and see if there are any errors on them, and then if there's potentially anything you can do to clean up, any past due accounts. And Ali mentioned earlier that they're offering that credit building plan. That would be useful for you. I do this third bullet here. I do this myself. You can get a free copy of your personal credit report at this website here. It's the only site that is free for all citizens. So you can get 1 copy from each of the 3 credit agencies once per year. Some other websites may want you to pay for that, but you don't have to do that with this. If you need credit counseling service, I didn't realize Ali was going to mention her option, which is probably the better option, but the State Corporation Commission also has a list of credit counseling services. You could look at that list. It's ultimately up to you, your due diligence, to make sure you're working with a reputable credit counseling service. And then in terms of the commercial credit reporting agencies, there are three: Dun & Bradstreet, Experian, and Equifax. I've given you the link here for finding information on their websites. I did want to mention one caveat here. So if you go to the initial site, they will show you what they have, what information they have, but then they want to charge you. Like they'll say, okay, you can see how it is today, but then if you want to monitor this, they do require, I believe, you to pay a monitoring fee. So that's your choice whether you want to pay for that monitoring. But just to, I think, to obtain the initial information, that should be free. In terms of what a lender will look for when reviewing your application, owners and operators of good character. We talked about that. They mainly look at your personal credit history to assess that. A feasible business plan, your expertise and commitment necessary for success, that you have sufficient funds, including the SBA loan, to operate the business on a sound financial basis, adequate equity invested in the business. So I can tell you that SBA only has a couple of instances where we set a minimum equity amount, and that is if it's a startup. Well, see, here's where it gets confusing. The equity requirements only apply to some of our programs. So for Express, the Express program, the lender gets to decide that completely on their own. But on our other programs, we set a minimum of a 10% equity injection for startups. And then depending on the circumstances, we would also require a 10% equity injection if it was a business acquisition, a change of ownership situation. And this came up in last month's webinar. When we're talking about equity, an equity injection here, we're talking about cash into the business. Someone brought up last time, could you have equity in your home and have that counted as an equity injection? And the answer is no. For an equity injection, it's cash that's injected into the actual project, if you want to call it that. So just having your equity sitting there in your home. Now, your home, depending on the loan, you may be asked to pledge that as collateral, and the equity in that would help you in terms of collateral, but it doesn't count as an equity injection. And then sufficient collateral. So one of the main benefits of a lender using SBA's lending programs, or we will accept a shortfall in collateral. So as long as repayment is shown by the business, if there's a shortfall in collateral, we're fine with that. Now, we do have policies that the lender has to comply with for our smaller loans, mainly the business assets, and anything that are financed would be taken as collateral. When you get into larger loans, so loans over $350,000, we then also ask the lender, or require the lender, to look at any personally held real estate. So that would include a personal residence or any investment property held personally, and you would be required to pledge that as part of the loan. And then the last bullet here, as I said twice already, the ability to repay is of utmost importance to the lender. So they're going to look at that either on a historical basis or a projected basis, depending on the circumstance. So a couple of common questions regarding applying for an SBA loan. Do you apply directly through SBA? The answer is no. You always apply directly through an SBA lender. We do not accept applications here. All your documentation is given to the lender. And then in terms of the paperwork, you'll be asked to provide, this slide deck is designed to be sort of an outline, but we can't cover everything. So it will depend on your circumstances. But I would say that this slide deck will cover most, if not all, of what you'll be asked for. So in terms of documentation, this first bullet here comes directly out of our standard operating procedure manual. So all loan applications must include the forms and information that the lender requires in order to make an informed credit decision. We have one borrower application. It's an SBA Form 1919 form. And what we're talking about now is the 7A programs. The 7A programs that I've mentioned that would include Express. 504 is different, and microloans are different. So we'll cover those in a minute. So we're just talking about 7A on this slide here. The form this borrower application is filled out by the applicant business. It is not filled out by each owner of the business. Just one document for the business, and then an authorized individual signs that form. And when you get the slide deck, you can use this link, and you'll see what we asked for on that form. The lender will ask for a personal financial statement from every 20% or more owner of the applicant business, and also guarantors. We require that be no older than 120 days at the time it's submitted to SBA. It must include the assets of the owner's spouse and minor children, even if the spouse and those children are not involved in the business. I've given you a link here. The lender is permitted to either use our form, which is the 413 form, or their equivalent. But if you just want to get an idea of what you'll be asked to provide on that statement, you could use this link and see that document. If a lender charges you a fee, this would be a non-SBA fee of greater than $2,500, they are required to have you sign a form and then outline what they're actually providing for that fee. The last bullet here, we require that the lender obtain federal business income tax transcripts from the IRS. And there are two purposes for that. One is to be sure that the business is small. But the main reason that we do it is that we want to make sure that the information you've given to the lender matches what you sent to the IRS. So back when we were in the pandemic, we found that we had a direct lending program then, and we found that information that the applicant business was giving us did not match what was sent to the IRS, and that's basically considered fraud. So it's not something we want to see, and we require the lender to check that. The lender will ask to see if you've been in operation for at least 3 years. The lender will ask to see business financial statements for those 3 years. If you're a startup, they'll want to see a monthly cash flow projection for at least the first year, or until you're showing positive cash flow. And I can't remember if I have it in this deck, but I could put it in the chat. There's a format if you need help with the cash flow projections, or you could just talk to Allie and the SBDC, and I'm sure they could help you with that. You'll need to have evidence of all licenses and formation documents required to operate the business. For example, a business license, articles of incorporation, partnership agreements, etc. You'll need a description and history of the business, so you'll include the nature of the business, the length of time under current management, depth of management experience. We've mentioned that earlier, or a related industry. So there's some strength if you've operated a business for someone else, but it isn't necessarily in the industry that you're applying that you're applying for the loan for. That still can help you, so I would mention it. But they're also looking for any industry experience. You would outline the business's management team, including if you're the owner, your daily on-site management, or if you're not going to be there on a daily basis, who will fulfill that day-to-day management function, and then what their background is. You should include that in your documentation. So I mentioned this. So the 3 most recent fiscal year and financial statements, that would be tax returns and/or financial statements. And then we also require an interim financial statement that's no older than 120 days, again, upon submission to SBA. And if the historical cash flow from the most recent full year and the interim statement do not show sufficient debt service coverage, then the lender has to obtain from you 2 years of detailed projections, including your supporting assumptions. And for a new business, oh, here, okay, so I have the link here. So for a new business, detailed projections, including supporting assumptions, which reflect positive cash flow within 2 years. And there's a link for that template. An equity injection, so we mentioned that earlier. You would just outline if you have the ability to have an equity injection. The lender will discuss what minimum is required. So I mentioned earlier, we set those minimums for startups and for some changes of ownership, we set that at 10%. But one thing I want to make clear, so SBA sets its guidelines, but the lender is permitted to set their own guidelines. So we may require 10%, minimum 10%, but the lender may have a different requirement, and we can't control that. They're permitted to set their own policy. If you're an existing business, you would have to include a current debt schedule, which includes all of the outstanding business debts, including any shareholder debt. If you're refinancing debt as part of your loan request, you would need to provide a copy of the promissory note, a payment schedule showing that each debt is and has been current for at least the last 12 months or the life of the loan. And you'll see there the definition of current. If you're renting space, you'll need to provide the lender with a copy of the lease. Just an FYI related to SBA's programs, we generally require that the lease for your business location be at least as long as the maturity. So that the lease term plus any options to renew should at least equal the maturity of the loan. So if the maturity is going to be 10 years, you would need to show the lender that lease term is at least out to 10 years. I mentioned franchises. So if you are a franchisee, you'll need to provide a copy of your franchise agreement to the lender. There's also a franchise disclosure document. It's usually a very large document that outlines the terms and conditions of the franchisor. You would provide that to the lender. Any federal, state, or local citations which would preclude your business from normal business operations, you would include that. You would discuss any liens, judgments, bankruptcy filings, or pending litigation, including divorce proceedings. A couple of comments on that. So SBA does not have a specific rule that says that if you had a past bankruptcy that you are ineligible. So there's no, specific requirement related to that. But the lender will look at that as part of your overall request. And what they're looking for is that you have reestablished credit. So, let's say you had a bankruptcy 5 years ago, they'll look at your credit now to see that you have some accounts there that you've been paying on time since the bankruptcy filing. And then in terms of divorce proceedings, what we usually recommend is that if you're involved in a divorce, that you be able to that you wait to apply for your loan until the divorce proceeding is complete. The reason for that is SBA needs to, and the lender needs to, make an assessment of the breakdown of the assets between the parties. And if we don't know what that is, it could affect the loan moving forward. So the best thing to do is just wait till the divorce proceedings are final. If you're buying equipment, inventory, or other assets, I think I mentioned this earlier, you'll need a detailed listing of what will be purchased with the loan proceeds and the cost quotes. And then collateral, we talked about that earlier. So you would just outline the business and any personally held collateral that you're willing to offer. If you're buying an existing business, you would need a copy of the buy-sell agreement. The second item is not something you have to do. It's something the lender will have to do. So we require what is called a business valuation with each change of ownership request. That's to justify the purchase price. The lender will order that. In fact, they can't use a business valuation that you have obtained. The lender has to order that valuation. It has to be addressed to them and sent directly to them. They will pass the cost on to you, but they can't accept one that was prepared for you or for the seller. A pro forma balance sheet for the business being purchased as of the date of the transfer, so it show the breakdown of assets and liabilities as of that date. A copy of the seller's financial statements. So we talked about earlier the 3 years worth of financial statements that will be required from the seller. And also, I believe we also require an interim statement no older than 120 days. And then that note there, you'll see in bold, just an FYI, when an SBA loan is going to be used to finance a change of ownership, we want to see a benefit to the business. So we're not, we don't care that the buyer or seller is getting a great deal. We want to see some actual benefit to the business as a result of that change. So run the business for 30 years. Ellie, I guess I'm getting a unstable message. Can you still hear me?
Yes, I can hear you loud and clear.
Okay. One example of that would be, let's say, again, you have someone who's run a business for 30 years, they want to retire, and they would shut the business down if they didn't sell it. That would help preserve the existence. Another example might be, let's say you had a business that had an absentee owner who put a manager in place, and the manager wasn't really doing a good job. You may have plans to come in and build that business up, so that would promote the sound development of that business. So those would meet our requirements. If you're purchasing real estate, we need a copy of the signed purchase agreement. And it's not your responsibility. Again, this is just for informational purposes. The lender will be required to perform an environmental investigation on any commercial property that's taken as collateral. They will order that, and we'll discuss that with you. That's just to make sure there's no environmental contamination on the property. A couple of comments related to closing costs. So the lender is permitted to collect from you necessary out-of-pocket expenses such as filing and recording fees, photocopying, delivery charges, collateral appraisals, the environmental investigation reports that I just mentioned. They are permitted to collect that from you at closing. And if your request involves acquisition or construction of owner-occupied commercial real estate, or that the business acquisition I mentioned earlier, there will be a cost, as I said, for the evaluation. And then we also require lenders to get commercial appraisals, real estate appraisals, so they will pass that cost on to you. Now, you can ask them if they're willing to include those costs rolled into the loan amount. Instead of having to pay them out of pocket, you can discuss that with the lender. I put this in here, I believe, because this came up in a past webinar. So SBA does require on all of its lending programs that any individual who owns at least 20% or more of the business must provide an unlimited full guarantee. There are some cases where even if you own less than 20%, either SBA or the lender may require a personal guarantee. That usually comes up in cases where, let's say you have someone who owns less than 20%, but they're critical to the operation of the business. They may be required to provide that personal guarantee. And you can view, if you like, SBA's document, although we do allow lenders to use their own personal guarantee form. But if you just wanted to see what is on, example of what is on the form, you could use this link. And then if you wanted to understand more about how a personal guarantee works, I hope I don't get myself in trouble here. This is not an SBA website. It's an Investopedia website, but they explain more information about the personal guarantee. Okay, so that's the end of the... Oh, and let me back up. That personal guarantee requirement applies both to the 7A and the 504 program, and also, yes, to the microloan program. So that's not 7A specific, but this next slide here is just talking about the paperwork for a 504 loan. So we're not going to go slide by slide on this. I don't think it's needed, but there's an application form. The CDC fills some of it out and you fill some of it out. So pages 1 through 4 are completed by you, the applicant business, and then the CDC will handle a section. And then if you wanted to see the other documents that would be needed, I've outlined them here. So you'll see here exhibits 3, 5, 6, 7, et cetera, et cetera. You can see, but it's going to be very similar to what we covered on the 7A side, business financials, management background, different things like that. So it's very similar to what we've already covered on the 7A side. And I don't know if I said this, I should have said this earlier, but under the 504 program, and we would have provided you a link on an earlier slide to inquire about a loan under this program, you would contact what is called a certified development company, which is a nonprofit entity that SBA has approved to make these loans, and they will work with you. They'll give you an outline of what is needed, and then you return that to them, and they handle the SBA approval process, and they work with the lender, the commercial lender, to explain how the program works. In terms of the microloan programs, the intermediary, we don't keep lists for each of our microlenders, so they will provide for you what they will require. At a minimum, they're going to require an application, just a basic application, and then they will outline the additional information they need from you in order to apply. And I provided this earlier, but here's another link for the list of microlenders, and you can use that. You're welcome to use that link. So we have, over the last several years, asked for advice from lenders that we could share with small businesses who are applying for loans. And we've got a couple here. One is related to projections. One thing that they mentioned that they often see are unrealistic projections. So you should be able to outline for the lender what your assumptions were when you put those projections together, and the SBDC can help you with that. But they're looking for realistic and attainable projections, and they want to see your underlying assumptions. Most lenders will use industry data like RMA data to determine if your gross and net profit margins and other financial metrics are in line with industry averages. And I've given you a link here which outlines those metrics that you can look at yourself. And they do that to see whether, to give them an idea of whether your projections are realistic. In terms of complete applications, so this came up several times. Lenders have shared that most of the delay in the application process is caused by incomplete information provided by the applicant business. So let's say you go to the lender, they give you an outline of what they need, you send it back, and then they respond back, well, we need three more items, and you send one item back. You don't send all three back, but you send one item back. Unfortunately, the lenders can't move that application forward without all three of those items. So they will basically put that aside and wait for you to submit the other information, and it slows down the process. And believe it or not, it's not the delay is more on the side of the back and forth between the lender and the applicant than it is between the lender and SBA. But just make sure that you gather all that information and submit it to the lender all at once. And so our office maintains a list of SBA lenders. These are 7A lenders, which you're welcome to utilize. We try to have a contact name and a phone number for someone that has some SBA experience at that lending institution that you can contact. So you're welcome to use that. We update that on a regular basis. And then in addition to that, we have a system called Lender Match. You go to this website. Unfortunately, it does require a login and password, user ID and password, but that's mainly to help protect your information. So you log in, you outline information about your business and the loan request that you're looking for, and then that gets sent out to any lender who has signed up for your where your business is located, the area where your business is located, and then if they're interested, they will opt in, and then ultimately you'll get a list of every lender who has opted in, and then you're welcome to uh, communicate with them regarding your loan request. I did want to mention one caveat, which you'll see here on the screen. So every lender who's on this lender match system is an SBA lender. So you're not going to get spammed from that system. But what may happen is that lenders on that system, they may have some non-SBA partners or lenders that they work with, and they may refer you over to those other lenders. We can't really control that, but once you get outside of the SBA lending area, we have no control over the interest rate charged, the maturity that is set, et cetera. So what you could potentially see is they might refer you to a lender who has a high interest rate loan, and of course we don't encourage that. In fact, we highly discourage that. But it's up to you. You're a business owner. You make your own decisions. It's just you need to exercise your due diligence before entering into any financing arrangement. But again, all the lenders on the site, this lender match site, are SBA lenders, but just be careful if they refer you outside and it's got an excessive interest rate or something like that. Be careful with that. You'll see when you get the loan chart, SBA sets maximum interest rates and maturities. So at least for our lending programs, you're, for instance, not going to see an offering of a 20% interest rate. What is prime right now? We can go up to 6% over prime, but so you're not going to see 20, 30, 50% interest rates with any of our lending programs. We offer on our website, this is actually done, it used to be monthly, I think it may even be weekly now, what we call SBA lending reports. This can help you in a couple of ways. So this link I provided you here specifically goes to the website for our district, and you'll see we cover all of Virginia except Arlington, Fairfax, and Loudoun counties and those independent cities there. But you can, if you happen to be in another state, change the drop down and select another state. But this can help you in a couple of ways. One, these reports will list every lender who's made at least one SBA loan in the time period they're looking at. And so we have this fiscal year, and I think it goes back seven fiscal years. So it'll show each lender. It'll tell you the total number of loans they've made in our district, and then the total dollar amount. If you happen to be in the DC area or in those Northern Virginia counties, I've also given you the link for Washington, DC. So that can help you, first of all, determine which lenders are most active in SBA lending programs. And then the second thing that might help you is on the far right side of that report, it'll show each lender's average dollar size, and that could help you, if you're looking for a specific dollar amount, you could, especially lower dollar amounts, it could key you in on those lenders that are lending in those dollar sizes. So that's the end of the slide deck, I believe. There's my contact information, and you're welcome to contact me if you have any questions.
Thank you, Ford. I think we'll move into our Q&A portion now. Would you mind turning your camera on?
Yeah.
Beautiful, thank you. Alrighty, so our first question is about loans for purchasing existing businesses and whether SBA loans are, that would be something a person could use SBA loan for.
Yes, definitely. It's a common use. So we have three change of ownership types that are eligible. So if you're coming from the outside of a business, you're buying the entire business, that's eligible. You could have a partner buyout where, let's say you have 50-50 owners, 50% owner wanted to buy out the other 50%, that's eligible. And then, as I mentioned earlier, if you are coming from the outside and you wanted to buy a part of a business, we also allow that as well. Now, you saw me on the slide. I mean, I took it off my screen, but there are additional documents that you have to provide to the lender But the main benefit of using an SBA lending program for the change of ownership is that we are fine with a large portion of goodwill, and goodwill is non-tangible, so non-tangible things that you can't touch. Uh, that's the reputation of the business, the client list, et cetera. That's sort of considered goodwill. Uh, we're fine with that as long as repayment is shown. So lenders generally do not like a lot of goodwill. They don't want to see that. So you can use our programs for uh, change of ownership requests with a large portion of goodwill. Yeah.
Wonderful. So our next question is going back to the topic of having federal debt. And the question asker wants to know if having student loans makes you ineligible for an SBA loan.
No, no. And in fact, I believe I mean, I can look this up now, but I believe they have focused that prior. So what we're talking about now is called SBA's prior loss rule. And I can read this here to you. So I mentioned there are two ways that this comes up. If the applicant, and what they mean by the applicant, they mean the applicant business has previously defaulted on a federal loan or federally assisted financing and resulted in a loss, or any other business owned, operated, or controlled by the applicant or an associate. And here's where we get to the individual. They call individuals associates, previously defaulted on a federal loan or federally assisted loan, then that's considered a prior loss, and that would make you ineligible. So only just having student loans, if you're current on them or even in deferment status, if the deferment was approved, that's not a problem. But if you had a prior loss, then that could be an issue.
Good to know. So the next question is, can you explain owner occupied for a business? Does it mean that the business owner needs to own the business that will occupy the property? Specifically, this person is thinking of buying a storage unit facility.
Okay, so first of all, I can tell you storage facilities are eligible for SBA financing. They did not used to be eligible, but they are now. We changed that many years ago. But when I say owner occupied, I mean that the applicant business is going to occupy a certain percentage of the building that you're either going to buy or construct. So let's say you go and you find a building that you want to house your business in. SBA is going to require that your business occupy at least 51% of that rentable space in order for it to be what we consider owner occupied. If you're going to construct a new building, then your business would have to occupy at least 60% of that rentable space. And I can, if you like, put in the chat what we define as rentable space. Uh, let's see. I'll just put this in the chat right now. We define what is rentable property. How do I? Okay, I'm just gonna send this to you, Allie, and you can post it. Or no, wait. Let's see if I can send it to everyone.
You should be able to send it to everyone. You may just need to switch the recipient toggle.
Okay, I'm trying to paste it into the chat, and it's not doing it.
Okay. If you send it to me, I can post it as well.
Okay. Oh, not working. Okay, let's see if I've done something wrong. It will not let me paste it into the chat. So I don't know what I'm doing. I don't know what I'm doing wrong. If I'm doing anything wrong at all. But okay, let's try it this way. Okay. I don't know if you can do a screenshot of this, but here is the definition of rentable property. I've got the document on my screen. I don't know if you can see that or not. But see there where it says rentable property is the total square footage, et cetera, et cetera. That's how we define it.
Got it. Alrighty, so I think we'll move on to the next question if you're ready for it.
Yeah. Yep.
All right, so next question is, if we were to have a personal loan for a government credit union like Navy Federal, would that make us ineligible for an SBA loan until it is resolved?
No, no, there's no issue with that. I mean, the lender will look at, your repayment history on that loan, but it does not prevent you from getting an SBA loan. No.
Good to know. Next question is, are online lending companies like Lendio not associated with the SBA? And is the SBA loan based on personal credit score and or business credit score?
Okay, as far as I know, Lendio is still not an SBA lender. Uh, I could, if I get a second, I can confirm that. Uh, the only one I can think of, let's see, and I can look this up while we're doing something else, but there is one online lender. Oh, what is the one like that? Okay. Anyway, Lendio, as far as I know, isn't, but I'll see if I can look that up while we're moving along. And then, uh, in terms of the personal credit, so definitely, again, most, if not all, lenders that we deal with will pull a copy of the personal credit report for every 20% or more owner of the business. Uh, some of them, maybe not all of them, will also pull a commercial credit report. I can tell you that when we used to process loans here, we ordered them. They were costly. We used to order them from Dun and Bradstreet, and they were really expensive. And they didn't. We found that they didn't really have a lot of useful information, so we stopped doing it. But uh, so it'll just depend on the lender. You can ask them if they're going to order a commercial credit report, and that's where you could use those links I sent to see potentially what those commercial credit reporting agencies have on your business. But personal credit, definitely, they're going to pull that. They'll pull the report and then the score. We haven't talked about scores. Uh, we don't set a minimum score here, but each lender will, and you will just need to ask the lender what their minimum score is. Some of them, won't go, let's say, below 600. Some of them, especially with our micro lenders, will go below 600, but you'll need to ask each lender what their minimum score is.
Thank you. So next question. If you are buying an assisted living home, do you still need to show your cash flow and if this will be your first and if this will be your first assisted living facility?
Yes, you definitely need to show your cash flow. Every applicant business will have to do that, because that's what the lender looks at for, to determine repayment ability. So you would, if you're just opening a new facility, you would provide projections, and the lender will look. Well, you could get help from the SBDC, like we said, if you wanted someone to review those projections, but the lender will definitely look at your projected cash flow to determine repayment ability. Um, and then what was the rest of the question?
Give me 1 second. Um, just clarifying whether if this person would be buying their first assisted living facility, if the same parameters would apply.
Yes, yes. So same would apply. And in terms of the financial information, yes, same would apply.
Okay. Is there a next, moving on to the next question, is there a recommended time between filing a personal bankruptcy and being able to apply for a loan with a lender with an SBA guarantee?
Okay, I missed the very beginning of your question. Sorry,
Yeah.
say that again.
Is there a recommended waiting period
Oh,
between
waiting period.
filing
Oh,
a personal bankruptcy loan and being able to apply for an SBA loan?
no, again, the main thing that the lender is going to want to see is some sort of reestablishment of credit. So no definite waiting period. Just, do you have any current accounts, and you can show some sort of repayment ability on those accounts. So there's no minimum waiting period.
Good to know. So next question. If I'm looking to buy an existing laundromat and let's say I need 50 to 100,000 for an initial payment to the owner, would I be looking at the SBA Express loan or the 7A loan, being that the amount of the loan is smaller?
You could use either. Again, in terms of the program, the lender will work with you on potentially which program is the best or which they offer. Um, but I will mention, since the way they phrased this, so they said they wanted 50 to 100 for their initial payment to the seller. I did want to mention that SBA requires that this is considered a one-off transaction, meaning that your loan that you're going to get, your SBA loan that you're going to get, in combination with any equity injection from you or seller financing. We do allow seller financing as long as they're subordinate in terms of collateral. Uh, there, that total will affect the transfer of that business. In other words, what I'm trying to get at is, we would not allow you to apply for a loan for, let's say, 50 or 100,000, where you make that payment to the seller, but the business does not transfer to you, and or there's some stipulation in the buy-sell agreement where the seller says, okay, you pay me 100,000 now, and then within 2 years, if some criteria happen, occur, then some additional money will change hands. We want to see that all the money changes hands at closing on this loan. So you can have seller debt, but no additional payments. Like, you pay them 100 now, and then 2 years from now you pay them an additional 100. We don't allow things like that. But again, the loan program, that will be determined with the lender, and they can discuss that with you in terms of what might be the best fit.
Good to know. Next question. The question asker has been looking out for a small accounting firm to be acquired with an SBA loan assistance. After a few months, this has proved very challenging. Any advice on how to navigate this approach in such a situation?
It might help to know what the challenges are. If you've obtained from the seller the financial information, and that financial information shows sufficient cash flow to service the debt, then there shouldn't be an issue.
It does look like the question asker is wondering about how to get a loan approval before they identify the firm.
Okay, you can't do that. Not with us. So we used to, years ago, have a pre-qualification program where we would look at applications ahead of time and then give you a letter, which you could then take to a lender and apply. But you have to. I mentioned earlier mortgage financing and auto financing, where you haven't picked your car yet, and you probably haven't picked your house yet, and you go to the lender and you say, how much do I qualify for? Business lending does not work that way. So you have to know what you're going to do with that money when you apply with the lender. So you can't just say, I want to buy an accounting firm, but I don't know what that firm is, because the lender wants to see the specific financials for that accounting firm in order to make their decision. So you would need to have that specific business in mind when you went to the lender.
So I do have a response in the Q&A from another participant recommending that the question asker find a business broker, such as an online site for buying or selling businesses. Ford, is that something you might be able to speak to?
Well, no, we have many lenders that work with business brokers. So, but again, that's going to help you narrow down to a specific business. It's still, the goal is a specific accounting business. So in other words, it's not going to be, but that is a potential, yes. You could contact a business broker to see what businesses are for sale, and then work with them on that. But again, the ultimate goal is to determine a specific business that you're going to buy when you're applying for the SBA loan. That we see that again. Many lenders work with business brokers, so that's not a bad idea. You could work with them to find a business.
Thank you. So next question is, what should someone do if they are in the areas that you and your group do not cover? I believe this is in reference to like in the Northern Virginia, DC region.
Okay, so you'll find we gave you that link for our list of lenders. You'll find that there are several lenders on that list that will lend up into that Northern Virginia area. So you could use our list, and then Lender Match. You could use that. In terms of the SBA lending programs, that we covered the 7A, we covered the 504 and the microloans. At least for the 7A and the 504 programs, they're going to be exactly the same in Northern Virginia as they are down in our district. In terms of micro lenders, let me see. Well, the link I included in the PowerPoint to the micro lender list, that will give you micro lenders. Yes.
Sorry, you just cut out for a second.
Okay. That link I gave you to microlenders will give you, any other microlenders that are not in our territory. So I can tell you in the DC office, they've had some staffing issues, and I don't believe they maintain their own list of lenders. So you'll just, like I said, you could use Lender Match, or if you have a potential lender, you could reach out and we could let you know whether they make any SBA loans. You could also use those lending reports. Remember, I mentioned those lending reports. That will give you a list of lenders that are lending, and you can focus on the DC area.
Thank you. Following up on that microloan thought, what are the current interest rates on for microloans, and are those rates fixed?
The rate on microloans, they're determined based on the cost of funds for the microlender. And some of them, so I told you SBA lends the money to the microlender, and then the microlender turns around and lends that directly to you as the business owner. So on some loans that SBA has made to the microlender, the interest rate might be 0%. Some cases, 2%, 3%. And then the microlender is permitted to go up to, and I'm going to have to look this up because I always forget, but I think it's 8.5% over that cost of funds. But you'll find that many of them will lend at a rate lower than that. But if you give me just a second here, I can tell you, I think it's either 8.5% over that. And then in terms of fixed or variable, that would be determined with the lender. We don't dictate to the lender whether it has to be fixed or variable. Let me see.
While he's looking that up, I'd just like to remind all of our participants, we have about 10-15 minutes left in our session, so please do drop those questions in the Q&A function.
Okay, so here's the information. So the microlender may charge up to 7.75% over the intermediary's cost of funds if the loan is is more than 10,000. And if it's 10,000 or less, they can charge 8.5% over that cost of funds. So you'd have to ask the lender, but again, many of them will, that's just the maximum. That's the maximum that they can charge, but they may charge you less than that. So it'll depend on the microlender.
All right. Thank you for looking that up, Ford. So our next question is, if someone who wants to buy an existing business but does not have, the 3 businesses and experience, would they still potentially be approved for an SBA loan?
I I'm not sure I understand that. So if you're buying an existing business, we would require to see the 3 years worth of business financial statements and that, but the seller would provide that to you. If you don't have experience in that specific industry, that you're buying that the business is in, uh, you could potentially hire a manager, and if they had the experience, you could outline that. But generally, a lender is going to want to see some sort of either industry or prior ownership experience. So maybe it wasn't in that specific industry, but you uh, had management experience. That would be helpful. Um, that's probably all I'll say on that. Uh,
Okay. I think we can, if the question asker would like to clarify their question, we can come back to it. Moving on, does the credit building, and this is, I think, a question for both of us, since we both have credit building advising options. Does the credit building program support building personal credit or consolidate pay down personal debt so you can improve your credit worthiness for your business? I can answer for the Capital Pathways Credit Building Advising Board if you want to address the SBA credit portion first.
Okay, so you can refinance business debts, but SBA programs cannot be used in any way to refinance personal debts. So, and we don't have any sort of credit counseling or credit building program, but Ally has that there. But again, only business debts can be refinanced with an SBA loan, not personal debts.
So for the Capital Pathways Credit Building Advising, it's not consolidating or paying down personal debt. It's more looking at your both your personal and your business credit and helping identify areas of weakness or growth, so to help you build that plan to improve your business credit and also eventually disentangle your personal credit from your business credit. And that is all wrapped up in at part of our efforts to help you become financially prepared for business credit or business loans. All right, moving on to the next question. Can you use an SBA loan for a residential fix and flip, not for a rental?
Okay, so I'm going to say, well, we have a program which we did not cover here today. It's called a builder cap line, but it's not even worth mentioning because uh, no lender has used it in probably, well, I think we had one lender use it for one loan in the last 30 years. So it's not even worth discussing. No lender is going to use that. You can, under that program, uh, it's the only program that allows spec building. Now, if you're going to build residential or commercial properties under contract, we don't have any prohibition on that. But yeah, I would say the answer to that question is no. You would not find any avenue through an SBA program for that.
Thank you. So I think you might have already addressed this next question or part of it. Actually, the next two. Would SBA loans be approved for commercial properties like a warehouse? And I think you might have touched on that with your owner occupied or rental portion, but if you
Right.
could address a
Yeah,
warehouse.
well, warehouse, if it's going to be used for the business, uh, I mean, I guess I'm going to guess that potentially what someone might mean by this is, uh, I mean, if it's a warehouse for your business where you're storing your products, that definitely would be eligible as long as it meets those occupancy requirements where you're occupying at least, if you're buying an existing building, 51%, that would be fine. Uh, if we talked about the storage facilities, those are eligible. Uh, so yeah, that's the response for that.
Similar question for a 170 unit apartment complex.
So we can't do apartment complexes at all. That's ineligible for any SBA financing program. No apartment complexes.
All right. And then touching back on that storage unit portion, do the units themselves count as occupied space? Um,
Yeah,
and
I see the question there. So yeah, and this is where we got into years ago. They were not eligible because I don't want to get into the long story on it, but they are the whole facility. If you're going to have a storage facility, that whole facility counts as your business, and in that case, you would have 100% occupancy. Now, it sounds like this person is saying maybe there's a storage facility that occupies half of a building, and the other half might be something else. Well, the storage facility business itself has to meet our occupancy requirements. So in that case, if you had, 50-50 split where half of it is a storage facility and the other half is, I don't know, a restaurant or something, I'm just making this up, that would not meet our requirements because in that case, your storage facility would only be occupying 50% of the rentable property, and we require it to be occupying at least 51% of the rentable property. So I think that should answer the question. I mean, if you have one building and the entire building is a storage facility, then that meets our requirements because the whole building is your business. The entire building is the storage facility, and that's your business. I hope that answers that. Yeah.
I agree that hopefully that did. Just as a heads up, we do have only about 5 minutes left in today's session. So I think we need to cap our questions with the ones that are in our queue. Thank you, everyone, for asking your questions. We'll continue to answer the ones in the queue. But for if you have not submitted your question by now, please do reach out to me. I've dropped my email address in the chat. So for the next question in our queue, this is again back on that storage unit topic. Do the storage units themselves count as occupied space? I think you already said yes, they do. But if it's an additional rentable space on the property that the owner does not necessarily want to occupy, could that be leased out?
Right,
and
right.
would that count against their occupied space?
Yeah, that's the question I just answered. So again,
Okay.
if I think we went over that in detail, so I don't think we need to.
Okay. So moving on, if the business owner has a work permit but not a green card because it is still pending, are they still eligible to apply for an SBA loan?
Okay. I am sort of reluctant to get into this only because we don't know the specific circumstances on that. The best thing would be to talk to the lender. I mean, we do require a copy of the green card, which what we're looking for is evidence that you're in the country legally. Let's see what this is. Business can take up to a year for a newly arrived immigrant to receive a 551, which is the green card. New immigrants are issued an immigrant visa with a Customs and Border Protection stamp evidencing their lawful permanent residence for a full year from the date the new immigrant entered the U.S. This visa with CPB stamp serves as evidence of legal permanent residence status so long as the visa is not expired. So, I mean, if the person who wrote that wants to read all of what I'm just reading right now, I can give Allie a link to this manual that I'm reading from, and she can send it to you. It may be better for you to read it yourself so you understand. And it starts on page 27, but I'll put a note here to send her that and you could read that directly so you could understand.
Thank you, Ford. Um, so next question is, would purchasing an existing car wash be eligible for an SBA loan?
Yes, just on the face of it, a car wash is eligible, purchasing a business is eligible. We talked about those additional requirements, but yes, just on the face of it, there's no prohibition on that. So that's yes.
Next question is, how long does it typically take to get approved for a 7A loan or microloan?
Um, so that will, we mentioned the back and forth between the lender, so that will have some bearing on it. Uh, in terms of let's say we talk about a larger 7A loan, the turnaround for SBA, and this is SBA alone, is going to be at least 2 weeks. So that's the time that the lender submits the paperwork to us until we make our decision is going to be at least two weeks for larger loans. For smaller loans, I've seen some lenders get a response, within a day or two. I don't know, with the staffing cuts that might have bumped up a little, but and then in terms of a microloan, I have no estimate for that. The microlender can tell you what that would be. I mean, it probably is similar. They're small loans, so I don't really have a turnaround for that.
Thank you. And to answer the second part of a question, which is that the asker needs assistance applying for a trademark and asking for a list of attorneys we can recommend. For the capital pathways side, we do have our legal advising option or resource, and that's limited to a 1 hour session with an attorney partner that we have. They can't represent you or fill out anything for you, but they can answer some of your detailed questions. So please do reach out to me about that part. All right. Um, Next question is there a limit to the number of SBA loans a business may apply to once they're successful with their first business?
No, so you can have multiple outstanding SBA loans. We do set a maximum exposure, they call it, for all of your outstanding loans to one business plus any affiliates, if you happen to have affiliates, which is generally 3.5 million. So yeah, but you can have multiple SBA loans outstanding as long as you don't exceed that amount. When we talked about earlier, you could have a 504 in combination with a 7A. You can have, for instance, a 7A term loan and then an express line of credit. So there are several different combinations. You can have multiple outstanding debts as long as they don't exceed our maximums.
Thank you. So next question is, does the SBA offer loans to do business abroad where the business owner will be buying equipment and I believe processing them or processing their uh, product in the United States?
So you can't use any of our funds to help that business overseas, but it sounds like I don't know if what they mean is exporting. You can definitely use our programs for exporting. So if you're gonna buy equipment and manufacture something and then ship it overseas, that's definitely eligible. We didn't get into. We have separate export lending programs. Uh, you'll see that on your loan chart. And if anybody has a need for that, you could reach out and we have a specific export finance manager that could talk to you about it, or I potentially could talk to you about it. But you can't have an SBA loan cannot be used to finance anything overseas, including if the operation is overseas. But if it's here and you're manufacturing things here and shipping them overseas, that's eligible.
Wonderful. Next question is whether there are any certifications like a SWAM certification that would give someone priority or higher eligibility in applying for an SBA loan.
So no, there are not. Our programs are open to everyone. We don't have any specific lending programs, either offering better interest rates or focusing on specific types of businesses. We don't have any of that.
All right, and I'm going to consolidate these next two questions because they cover the same topic. Are these are SBA loan programs available nationwide?
Yes, definitely. We've already talked about those lending reports. What you'll find here in Virginia is that we have many out-of-state lenders that make SBA loans in Virginia, and you'll find that around the country. You'll have a lender in, uh, I don't know, New York, and they make loans in Florida. So, in all of these programs that I mentioned to you today, the 7A, 504, and microloan program, they are available nationwide now, especially on the microlending side. Uh, there, each state will have their own set of microlenders, so you'll have to check that, and you can use that link that we sent. But yes, you can. Each SBA district office has their own website, and if you use the link that I provided for us, you can find the one for North Carolina or Florida, and then you could contact my counterpart in those states and see if they have, for instance, their own 7A lender list. And then they could also tell you who the approved CDCs are, although that link I gave you will also show you the CDCs in other states as well for the 504 program.
Thank you. So I'm going to skip a couple questions to follow up or loop back to our top question. Question I'm going to ask is about, are there SBA loan options for business startup? So if someone's looking to start their business.
Yes. So SBA does not have any, limitations on startups. That's fine with us. What you're likely to find more often is that lenders will have some limitations on that. So some lenders will say just flat out, we will not lend to startups. Unfortunately, we find that some of them will say, and we see this more often, they'll say, yes, we will consider startups, but only for individuals who've had experience in that industry before, or running their own business. They may potentially, and then some just they're fine with startups in general, but it'll depend on the lender, and we don't keep a list of specifically of lenders that will lend for startups. So you'll just need to ask the lender. I mean, our guarantee is an encouragement, for lenders to lend to all types of entities. So that's our way to encourage them to lend for that reason.
Excellent. Following on that startup idea, uh, if a business has indicated that they've taken a loss when filing LLC taxes with their personal taxes, does that impact how a lender would view them in asking for investment? Or is there kind of an understanding amongst lenders that without resources, it's hard to start a business and they would view it as non-profitable?
So the main thing there is, okay, let's say you have had your business for a year and it showed a loss. The main thing that the lender's going to want to see is because they're looking at either historical business information, or projections to justify or to indicate that cash flow is sufficient to repay the loan. So if you had a loss, you can explain to them, what happened, and then they will ask to see projections for up to 2 years, until you're cash flow positive to show that you can repay the loan. So it's not what they call a deal killer. If you've had a loss, you would just have to outline for the lender what what is changing and how you will be able to improve your cash flow in order to repay that loan.
Thank you. And as, excuse me, the question asker had a follow up. Do you recommend getting a secure business credit card for building business credit? And would that impact your appeal as an applicant for an SBA loan?
Well, anything you can do to help build the business credit, show that positive repayment history is going to help. I would say, yeah, there's no harm in that. It's probably a good idea if anything that you can do again to show that repayment history will help. Positive repayment history.
Good to know. Next question is, what are the maximum SBA limits I'm guessing for an unsecured loan and in terms of years.
So SBA, so again, we set maximums, we set maximum maturities, and also maximum interest rates. And we base those maximum maturities on what is being financed. So we allow the lender to go out, for instance, on lines of credit to 10 years. We allow them to go out 10 years for things like inventory, working capital, changes of ownership. They are all 10 years. But again, that's our maximum. The lender can set less than that, but we set a maximum. And then for things like equipment, we allow the lender to go out at least 10 years. They can go out to 15 years if the equipment that you're buying meets the IRS asset class, which allows it to go out to 15 years. And then for real estate, we allow the lender to go out to 25 years, although, especially on the 7A side, not all lenders want to go out that length of time because they like to have a balloon or a demand feature, and we don't allow balloons or demand features. So again, we set the maturity based on what the loan is going to be used for.
Alrighty. So next question is, what would be a good option for buying an existing business and with regards to getting a home line of credit or an SBA loan?
Okay, so that's your business decision in terms of whether you want to get an SBA loan to finance that purchase or to get a home line of credit. I mean, I would I would say, I mean, I guess what they're getting at is with the HELOC, home equity line of credit, the interest rate is usually very low, but we like to encourage businesses. You want to establish credit in the name of the business, not personally. And also, if you have that personal loan, it puts you at risk. On that's on your personal balance sheet. So I would say for business purposes, it would be better to get an SBA loan than to try to finance that personally. But again, that's your choice. I mean, you're a business owner and you can make that choice. But in terms of business lending, I would encourage you to either get a direct business loan from a lender or get an SBA loan.
Thank you. So last two questions. I appreciate you staying on a little bit longer than our time.
Yeah, yeah.
Um, can can an SBA or 7A loan be used for a recycling business in general, or would there be a better SBA loan option for that business?
So any of the programs that we mentioned can be used for that, as long as the recycling business is a for-profit. If it's a for-profit business, it's eligible. I mean, again, when someone asks that, I mean, you would have to show the lender the demand for the recycling. How you're going to make your profit and be able to repay the loan. But yeah, just on the face of it, a recycling business is fine.
All right. And then the final question is, who should a person living in the Richmond area reach out to for assistance with a SBA microloan?
Okay, so you heard me say earlier, unfortunately, in terms of an SBA microlender, we do not have a lender covering the Richmond area, although I can share with Allie and she can send it out. There are a couple of non-SBA options. For instance, the Virginia Small Business Financing Authority, which is the state lending entity. They have a microloan program. I believe their microloan program only goes up to 25,000. But I can send a link for that. And then there's also a local, again, not an SBA option. It's called Bridging Virginia, and I believe they lend statewide, but they're located in Richmond. And I'm trying to think if that's it. Those are the two so those are non-SBA options for the Richmond area. We don't have an SBA microlender for the Richmond area.
All righty. And I believe among the Capital Pathways resources, we have a network of microlenders as well. So please do feel free to reach out to me and ask that question, and we'll try and connect you with our network. So with that, our time has come to a close. So I'd like to thank you, Ford, for all the excellent information you shared today and for staying on a little bit longer with us to answer questions.
Sure, sure.
We look forward to future sessions with you.
Okay, well, thank you. Thank you.
Thank you. As a reminder to everyone, I will be sharing a recording of today's session, the slides, and all of the links that Ford has offered to share as part of a follow-up email that will be sent within a week of today. If you weren't able to ask your question in the time that we had, please do reach out to me. My email address is ajohn216@gnu.edu. You can also find me through our website, which I dropped in the chat. Thank you, everyone, and have a wonderful rest of your day.